one of the central topics for midnight, and also actually what popped up in the recent months, is privacy.
Yes,
And blockchain took out the middleman, but gave back privacy.
that's right. Yes,
In terms of if you go to a bank and someone at the bank needs to decide for you whether you can get a loan, is also giving up privacy. But now with blockchain, everything is open and transparent.
that's right.
And that's the exact opposite of what most people actually want, I suppose. Why is it that we see the entire topic surrounding privacy changing over the past few years? Like initially, everyone wanted to be open end to like have a blockchain that is providing all the transactions, and we had a topic surrounding privacy that was very negative back in 2017, 2018.
Yeah.
And now it starts to change. Why is that?
Yeah, so I think when Bitcoin was launched, as you say, it ushered in a new era of freedom, of flexibility, of removing that intermediation. A lot of that came about because of what happened in the financial crisis and some of the data leaks that were happening in the late 2000s. But as you say, people gave up. You had to agree to transparency. You gave up your privacy or your confidentiality. And I think the advent of zero knowledge, so ZK technology or ZK proofs, coupled with the cryptography technology around Bitcoin and newer chains, allows privacy to now become a component within blockchain infrastructure. And what we're moving to is from a space of privacy where it was fully shielded transactions to privacy with compliance. And that's key. That compliance element, the ability to disclose information, what you have to who you want, rather than to everybody, is key to that evolution. And without that, then you end up in the world of either full transparency or full privacy. And we have to go back to, what does privacy mean? Well, privacy is data confidentiality, in another word. And we all expect data confidentiality in every transaction, every interaction with our internet. We don't expect the bank, every time we withdraw money, to announce it to the world. And yet today, if you go and make a transaction on most blockchains and you make a withdrawal or a transfer for collateral purposes or just buy and sell trades, everything is visible. And people confuse anonymity or pseudo-anonymity with privacy. It's not. People eventually, if you're large enough and you're interesting enough, analytics will allow people to identify your wallets, identify your behavior. And the issue with blockchains is all of that data is immutable. It's transparent forever. So if they don't discover it today, they'll discover it at some point in the future. So with Midnight, what we're looking at is using zero knowledge technology, where we are shielding in a unique way both the data and, more importantly, the metadata. And we do it in a way where we believe that that interaction, starting fully shielded, can be done in a compliant manner. When developers, builders use it, or enterprises use it, individuals use it, it's done in a compliant manner. And then the smart contract language, or compact, enables selective disclosure. We often refer it to as rational privacy, the ability to share information that you are comfortable sharing. So Michael, you and I, before this podcast launched, we shared some personal details, where we live. What are you doing this weekend? If you don't mind me sharing, you're coming to the UK for a wedding. That is information that you're willing to share with me because you don't think it's important enough or sensitive enough that I can go and use it against you. I've just shared it for the world to know, and hopefully you'll have a great time at the wedding and your friends will have a wonderful marriage going forward. But that's information that we're now choosing to share. But you didn't share with me your exact home address. You didn't share with me your bank details or your last transaction. And that's what we come back to around rational privacy, the ability to decide what you share and who you share it with and when you share it.
I think that's a very good topic because every time when we have a guest, we do research, we get all the details from the guest. And I'm quite sure that not everything that's on internet, well, 100% sure, At least for me personally, I sometimes see data points on the internet that I'm like, well, I don't really like that to be on the internet. So that's also part of what you call rational privacy.
Yes.
The confirmation of yourself to approve that someone else takes some certain parts of your data. How is that different from SSID?
Well, the difference here is that in the technology that we're building, plus the partners that we're working with, the identity essentially sits with the individual. So in typical technologies today, even within Web3, we've seen various hacks where sensitive information has leaked. We call it PII. And that personal identity or information is stored by centralized players, Google, Meta, Coinbase. And the difficulties there, as secure as they can be and as much money as they have to put around cybersecurity, every now and then they have data leaks. We saw that with Coinbase. And every time that happens, you're asked to change your passwords, update information. But the difficulty with that is your personal data is out there. Your home address, your date of birth, potentially. So at Midnight, and with the identity partners and other sort of partners we're working with, is that information can stay in the hands of the individual or the enterprise. So there's no centralized actor storing information. So let's use that example of identity. Very, very often when you're asked to purchase something, you have to provide proof of identity. You go to a shop and you want to buy alcohol. You have to prove you're over 18 or 21. So in doing so, you hand over your driving license. But in that driving license, you provide information more than your age. You're giving away your date of birth. You're giving away your home address. And it doesn't have to be that way. And what zero knowledge technology allows is for that information to be held by an individual, but for them to present cryptographic, mathematical proof that they are above a certain age or they are within a certain jurisdiction. So think about financial markets, proving that you are based in the UK or in the Netherlands or in the US. That will give you access to different banking systems, different currencies. And that's where we believe the evolution of this technology goes, is that ability to retain and hold personal information and not put the data on chain, but proof of that data. And that becomes powerful for large enterprises. And as you only put the proof on the system, and that system is only, again, there to, or you open that up for selected disclosure, the important element around that is that nobody sees your activity beyond just a proof. And unless you have the keys on either side, you cannot discover what the actual underlying transaction was.
Yeah, so basically, practical example is you have a certain wallet, and then the government wants to check whether you actually have the assets that you say you have, and then you allow them to check it and to provide the data that they need to require to make that check. And inverse, if you go to, a grocery shop, you approve or allow the other person to check your date of birth and nothing else.
Yeah, absolutely. I mean, let's take today, most of the blockchains utilize, DeFi is, very topical and very embedded sector within blockchain. But every time you trade, before you even trade, you might have to move collateral, margin. You post it to an exchange from your custodian or your self-custody wallet. All of that is visible. Just the sheer action of moving collateral is a signal to the market of, are you long or are you short? So if the market's going up and you're consistently moving margin one way or the other, people can figure out what your position is and see what your trading behavior is. Now, that shouldn't have to be the case. Today, if you go and buy coffee with your credit card or with cash, nobody knows except for the barista on the other side and your bank. Yet you try and do a small transaction on any blockchain, everybody sees it. And it's trying to move away from that. We've just adopted that and got accustomed to it being the norm. And what we're trying to encourage people to see and visualize is actually there is a future in blockchain where the norm doesn't have to be that way, where there is privacy, where there is confidentiality. And when you have confidentiality, what you do is build trust. And that trust allows not only users to come in, but also enterprises and corporates to come in and other builders. Without that trust, we won't see mainstream adoption. We'll only see people trading the ETFs. So their information is not on chain, because essentially it's then governed by a BlackRock or a Fidelity. So nothing's really evolving in terms of adoption if we're not getting people actually building and using the technology stack on the blockchain itself.
It's funny. I was watching or listening to a podcast with the CEO of Wintermute, and there are a lot of accounts on social media posting about the flow of Wintermute on chain, and then making assumptions of what the position actually is, but it's completely the opposite. But it's super annoying for anyone that has usually a large position into a certain asset, that once it starts to move, people start to behave and react on it. One question I have when it comes to rational privacy and having your own information and approvals and all those things is that basically, if we would like to use Midnight and all our data is stored there, how are you going to make sure that Midnight can't abstract any data, or how is it stored that it sells in self-custody?
So actually, in Midnight, we never store the data. The data is never stored on Midnight itself, just proof of activity. So Midnight itself cannot abstract data, there is no central player in Midnight that can abstract the data. What we're giving builders are the tools, or users the tools to execute private transactions, shielded transactions. So it's either the builder and the application itself, or the user who's delegated access for privacy. So the network itself never sees the data. You're taking the existing data, converting it to a proof which is presented on chain. And only the individuals with the keys to that transaction can unlock the proof and see what the transaction itself is. So we are very different to a centralized actor. We are decentralized. We are permissionless. There are private chains out there which are permissioned, like JP Morgan's Connexus network or Canton. And they all do a wonderful job, but there is a gatekeeper to that. There is a central actor to that. And equally, not only that, but they are siloed. What we're doing with Midnight is creating a meta layer, a layer that can connect to many chains or be built on natively, where it's permissionless. So it's decentralized. There is no censorship. There is no gating. It is there for builders with the open source code to come and build, to come and evolve. And the way we've designed the tokenomics, again, it allows either the builder to retain or the application to retain the proof and the proof creation, or they can be delegated to the user for them to have full privacy around their transactions.